Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right then, finally back on YouTube, getting a video out. Today we're looking at precious metals. We're going to be looking at gold, silver. We're also going to take a look at platinum. May even have a quick look at palladium. But either way, I'm still getting messages and emails and stuff asking me about if the channel's dead. Why is the amount of content down so drastically? And so not everyone's getting the message, so I'm just going to reiterate it in each video I put out on YouTube. So the situation is, think of me as semi-retired. I'm putting my feet up for a year or two until my boy goes off to nursery. Alright, I'm now a full-time stay-at-home dad looking after my son, and of course my little girl as well, who's now 7. I'm looking after her as well, but she's at school most of the day, and now we've got the summer holidays coming up, so that's not going to be true, so I'm going to be even busier going forward for the next few weeks. And that's my priority, and I will only make videos as and when I have time to do so. Now for my patrons in the meantime, I'm still putting out a weekly live stream, or trying to. I've hit it the last 2 weeks. I missed 1 week, but I'm catching up. I'm still doing the dividend calendar and stock racing system for tier 3s each month, and you've still got access to all of the previous trading videos, Elliott Wave videos and educational videos which you can get access to. So I'm leaving the Patreon open. You're not obligated in any way to support me if you don't want to, neither is anybody else who is obligated to stay, but if you want access to that content, it's still available. There's a lot of value there and you can sign up and get access to it, and like I said, still doing the live streams as well. But as far as YouTube goes and overall other content, I don't have the time, and I won't have the time for a while yet, but I will come back and get more work done in the future. So in the meantime, all you're getting is what I can give you, and that's it, guys. I'm sorry if it's not a lot, but that's just the way it is. Priorities change, and I have the luxury of setting those priorities as I choose, and that's that. So enough said, let's come in and have a look at these precious metals. Now Tom's bullish, have been for ages. My count has been bullish for going back. Well, you go back on YouTube and have a look. Go back as far as you like. I've been bullish, and it's played out the way I was expecting it to have played out for months and months and months, for years now in that matter. So I continue to be so. This is what I expect to happen. Now I'm going to share some long-term ideas with you today about what I think is going on in this commodity space, specifically in the precious metals, and why I'm so bullish. Okay, and why I expect things to be bullish, and also the big rethink I've been having regarding gold. I've got a current count which we've been working on for months, but I've also got a new idea I want to share with you what's in this vein. We will come in and have a look at the actual counts themselves, but I just want to start here on the long term. So let's start here on the SLV on silver. And we're just going to start by observing this correction from 2011 to 2020. 3,258 day correction, and I see it as a sharp correction. Right, we could go from here, or from here, to here, or to here, to a low. So we get low, swing, low. Right, free wave move, sharp. No new price extreme featured above the prior high, so it's not a flat pattern. It's not a sideways combination, it's a sharp. So yeah, we could simply just put a box around it, like so, and say that this is a sharp correction. And it's a big one, 3,258 days. Then we have a huge influx of volume, boost of volume, and a bullish move off of a low, smashing all that prior resistance. Okay. We then come back to that same resistance level. Back test it. It's here, 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 all this here, here, and that's where we come to. Right, we correct. This, to me, alright, that's a correction. Not prettiest thing. That's definitely not a fucking impulse. Alright, that's a correction. Okay, and we could pardon my language, but I'm just getting annoyed with the fact that people are trying to sell that as an impulse when it's not. But either way, we come back in a correction. Right, and we come back into the golden zone. There's that prior high. Here's the golden zone, 61,865. Ping. Right in what was prior resistance becomes support, we bounce. If we take a best fit channel over correction so far, then we've come wibbly wobbly, timey wimey, down to here, back up, and we're basically doing something that looks like that. Oh, hang on. something that looks like that, where we've come down for a prior trend, right, and now we're basically back testing it. Right, so we're looking to a swing high now above this major pivot here, which is the swing within the correction, and also above this high here. Right, but that would be the major pivot. We'll talk about that later. So I interpret that excuse me, got a bit of a cough today. I interpret that quite simply as a 1 into a 2, and then this is 1 into 2, and we're off into a 3. Okay. There's one thing I preach constantly to my patrons, and I say it here on YouTube, is if you see a swing high in 5 and you see it pull back in 3, your next anticipation should be that. Right, that's ABC, that's 1, 2, 3. That's 5, 3, 5. Learn how to trade that, and you can do it on any time frame, on any asset, and your life becomes incredibly simple as a trader at that point. And that's all you do, go through live trading that swing. So that's what I think is going on in silver. Okay, now if I come over and have a quick look at a couple of other things, we're going to have a look at platinum. Right, now platinum peaked earlier. The 2011 high in platinum was a subsequent lower high. So we actually got a 4,403 day correction in platinum. Right. And it is 3 waves. 3 waves. This, okay, and on the prior to that, right, prior to that, we got 5 waves. This is 5, this is 3. So what have we just been talking about? Okay, when we get 5 followed by 3, what's the next move? The next move, which we can give 80% probability of occurring to, is that. So that's what we're doing in platinum. So that's the low. Now, like I said, there's always a probability that wasn't the low, but if I can't convince you that after 4,042 days, right, or 4,400, lots of fucking 4s, lots of 2s, long time. Right, if I can't convince you that was the low, then no one could. Okay, and I don't care if I can't at the end of the day. That's 1, that's 2. We're doing this now. Okay, that's what I think is happening. Now, it could be 1, A, B, C, deeper correction, and then 2. But a swing high to a higher low will be followed by another higher high. That's 535. It is on this time frame. Okay, and it is on this time frame. From 2007 in this case, 2008 high in this case, the GFC, and a total fucking implosion. Right, the count looks basically like this: 1, 2, 1, 2, off we go to higher highs in the coming years. That's what I expect to happen in platinum. Now, what this has got me asking myself in gold. So this is where things are going to get a little funky. Gold, okay, had a low in March 2020. Right, let's just go and, whoops a daisy. But it was here. As you can see, here's the prior swing high in 1980 all the way down to 2000. Here's 2011, which is the swing high in silver and the lower high in platinum. And here's the low in 2015. And then here's the low in 2018. And here's the low in COVID. It does not look the same, right? Gold's ahead of the other precious metals. And that's because gold's gold. Now, we went through an era... Excuse me. We went through an era where we tried to sell people on the idea of platinum being special, and rather than just a catalyst for, you know, engines and stuff and a reactive metal, we went through a period where we were like, oh well, you know, you've got gold standard, but then you've got platinum. You got platinum standard. Oh, what have you done? You've gone platinum in the US. You've gone platinum in Europe. You know, why didn't you have a platinum card? Yeah, right, platinum's bollocks next to gold, because gold's fucking gold at the end of the day. It's shiny and it's pretty, and that's the end of the story. Right, it's also eternal, unblemishable, perfect. Hence why, if any of the precious metals actually matter, and they are over some kind of long-term process, accounting for currency debasement, accounting for inflation, accounting for monetary policy, fiscal policy, you name it. It's going to gold first. Okay, it's not going to platinum. It's going to gold. Okay, so bar a little bit of marketing for platinum, which never really came out in the price, a little bit of public perception may have changed, but it didn't change in reality. Gold is gold, and that's that. So gold's been leading the way and is currently trading around its prior all-time highs. So we've been looking at gold for a long time as, let me find the counts. Patience. That one. There we go. So, actually, that's just confusing people. Let's just focus on this corrected bit at the top. We're going to come down into the day time frame for a moment. So, for the longest time, we've been saying it's 1, 2, or 2 to here. I've got a couple of ideas that have changed here. 2 to here. 1, 2, 3, 4, and now we're going to do a fifth of a 1. Right. Let me clear the chart. I honestly think this will be easy to understand if I just come out and zoom out. So, one, 2, 3, 4, 5. Right. We could have topped in a triple top. It's possible. Right. Or we could have an extended fifth to come, and this is 1 and this is 2. Okay, that's another way of looking at it. And this itself, excuse me, sorry. Voice playing me up. That this is going to top out in a... really, I'm sorry, excuse me. This is going to top out in another wave 1. Well, that's possible. But if that's the case, that means that when this completes in a larger wave 1, it's going to go into a rather large correction. Into a wave 2. And this is very much not what's going to be happening in platinum. And this is very much not what's going to be happening in silver. So as part of a big rethink, what I've ended up coming up with, and it's just a preliminary idea that I need to go off and work on, is this. That we actually have not been tracking a wave 4, okay, but we've been tracking a wave 1 into a wave 2, sorry, a wave 2. And that this move up was actually 5 waves. And it was 1, 2, 3, 4, 5. And then we had A, B, C, and now we've had 1, 2. Now this could be 3 more waves down, or it could be done. Now, why am I considering this? The main reason is because it brings us into alignment. Okay, we have 1, 2, 1, 2. We have, okay, on a much larger time frame, 1, 2, 1, 2. The 1, 2 we're talking about here in gold is 1, 2, 1, 2. 1, 2, 1, 2. Silver, the same 1, 2 is. This is the monthly chart. 1, 2, 1, 2. What this allows us to do, getting this high here in August 2020, which was the same high of August 2020 for silver and the same high for platinum. Where is it? Bear with me, it wasn't actually. Spoke too soon. March 21. Where's August 2020? This high, 1, 2, was part of the move up. So actually, platinum is lagging everything. Setting off later than everyone else. So we get a high in January 21. We get 1, 2, 1, 2. Silver, we get, it could be over here in February actually. Alright, because that's the actual high. That's the actual high. The dominant high, so in that sense it's the same. So February and March 21, February 21. I prefer it over here, and I prefer it as a swing with this being a new price extreme, but it's just the way I count it. Okay, it could be vague, you can make it work, I just can't get it to work putting it there. So 1 2 1 2 1 2 1 2 and gold 1 2 1 2. Okay, so it's just a different way of looking at it, where if we're syncing up across all of these precious metals, then maybe having to explain away wave 4 into 5 when everything else wants to go into a 3, maybe that helps explain it. Okay, now it's just an idea. Like I said, it's got some very rough work behind it at the moment. So that's what I wanted to start on. Now we'll come down and actually have a look at the counts. I'll timestamp this video so you can find the bits that you want to actually watch. But that's the long-term idea. We've had 3,000 plus day correction, 4,000 plus day correction, right? We've come into a low, we've moved off of that low, we've had a 1, we've had a 2. Right. Maybe I don't have to get it to marry up with gold. I just struggle in my head to see 5 topping out into a huge correction while silver's just leaving the launch pad. Yes, gold can be ahead, there's no doubt, but gold attracts people first and attracts investment first, and then silver races to catch up. But it races to catch up. It shouldn't be 10 laps behind, I don't think, which is what it really is when you look at the fact that we cleared the 2011 high back in August of 2020. Silver hasn't cleared its 2011 high yet, and it isn't even halfway back to it. It's a long way behind. Long way behind. Okay, which it could be. Right, so it could be 1, 2, 3, 4, and silver's only done its 1, 2. That's been our long-term count, and that will remain the primary in the meantime. I'm just considering the possibility that gold's actually completed a larger 1 into 2. Right, I'm not saying that's exactly what it is, I'm just saying it's something I'm considering and thinking about. So let's come in now and have a look at silver over the shorter time frame. So we're going to come down to the day time frame. Okay, so we had the CPI yesterday, right? And anyone who knows me and has been on the Patreon for months will tell you that when we were still going up in inflation, going up past 4% on the way up, I was talking about how we would eventually peak somewhere between 8 and 12%. We actually peaked at 9, and then we would come down faster than we went up. And that's exactly what's happened, because I said we're raising rates far too fucking aggressively, far too quickly, and we're going to do way more damage than we realise. And by the time we realise, we'll be in deflation. Now, we haven't realised yet. The Fed is still worried about inflation, even though it's at 3%. At this point, from a gross number, CPI number, COVID didn't happen at this point. We're back where we've been before. Take your pick over the last 14 years. Inflation's been at 0, it's been at 2.5%, it's been at 3.6%, it's been at 3%, 2.8%, blah blah blah. We're in that territory now, right? So it's almost as though it didn't happen when we look at the gross figure of the CPI. And I think it's going to go lower. It came down 100 basis points, okay, in a month. Now I think that's what we're going to be looking at again. Maybe not a full 100 basis points, but I think we're going to hang around maybe for a month. We might get a slowdown here at the free handle, but we might just break the free handle and be on our way down to 2.5. Okay, but sooner or later, or I should say sooner or later, eventually we're going to realise, holy shit, we're heading towards deflation rather than more inflation. Rates are too high, liquidity is too tight, and we've got a serious fucking problem on our hands, right? But at that time, by the time we realise that, by the time the Fed realised that, and the time the government realised that, and the panic which comes with it arrives, we'll be back to our old tricks. It will be unlimited liquidity, money printing to the fucking moon, and cutting rates back to 0. Right, and if you think 9% inflation in the last cycle was high, you wait until you see the next reading in 2 years' time or 3 years' time when we go into this next massive expansion. Because that's what we're going to do. We're going to cause a recession. We're going to cause a big meltdown, as a result of over tightening, and then we're going to just turn the taps on like we've never turned them on before. You think 6 trillion, 8 trillion, 9 trillion was a lot to print? You ain't seen nothing yet. Okay, and that would explain 1 and 2 in silver, 1 and 2 in gold, 1 and 2 in platinum. Commodity cycle of monstrous proportions around the corner potentially, with the insane money printing that will likely come, and the cutting of rates, and all the other panic that will come when we realise that we've overdone it and inflation was always coming down, and all the inflation fears of this being the big one were wrong, and that is all yet to come. So there you go, a little fundamental rant for you. All of that could be a load of bollocks, it could be completely wrong, it's just every call I've made on it over the last 1.5 to 2 years has been absolutely spot on so far. So I'm just going to stick with what I've been saying. So if that's the case, then we have got a huge inflationary wave coming in the next few years, because we've got to have a deflation first, we've got to have a recession panic, we've got to have overstimulation, overprinting, and then all of that money will be sloshing around again, and prices will go to the moon eventually. Again, it's just not now. So let's get back to it and have a look at our account. Right, so as I mentioned, we came back to major supply and demand. Okay, came back to major demand, I should say. We came back also to the prior support resistance level, 16.63. We came back also to the fib retracement of golden zone 61.618 to 65, and we bounced from that level. So let's just tidy this up a bit. Get rid of that, and we'll get rid of that. We've come back into supply and we've sold off. We've come up in a move, we've come back in a move. There's a 3-wave swing. Now that's what we look for. We look for 5 up, 3 back. We're looking to trade this bit here. That bit could be over, and we could now be 1, 2, 1, 2, and maybe the bears are right, and we're coming down lower. It's possible, right? I've got a count which still doesn't take out the prior low, which still comes down deeper. But in the meantime, I'm going to be bullish, and I'm going to suggest that we've had a 1 into a 2, and a 1, A, B, C into a 2, and now 1, 2, 1, 2, 1, 2, 3, 4. 3, 4, 3, 4, and we'll break out. Okay, and this would be 1, 2, 3, 4, 5, and we're now working on a minor 3. So what I want to see break here now, I want to see the prior high at 23.94, minor pivot. Right, I want to see the minor high at 23.94 break, and I want to see the major pivot in the corrective move down at 24.90 break. Once we've done that, we've ended the sequence of lower lows and lower highs. So here's a high, here's a low, here's a lower high, here's a lower high, here's a lower low, here's a lower high, lower low. We've broken that sequence. Okay, we cleared 24.90. At that point, I think we've gone 1, 2, 1, 2, 1, 2, and now we're off in a 3. At that point, we've then got the prior high to clear. Okay, this is another major pivot, obviously. You clear that, and you're part of a larger three-wave swing. So let's just do a quick reminder again. Okay, turn off all drawings at once. I'm sure there's a button to do that. I've just forgotten it. Quick reminder of what we're talking about. Let's scale it back. Right, so we've got 5 up, 3 back, 5 up. Okay, we had 5 up, 3 back, 5 up. Larger degree, 5 up, 3 back, 5 up. Really massive degree, 5 up, 3 back, 5 up. Now it could all be 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, 3, 4, 3, 4, 3, 4, 3, 4, 3, 4, and we're going out 10 plus 10, 20 years, and that will explain the next massive inflationary cycles we go through over the next couple of generations, or next generation or so. And silver will be coming in along with gold and other precious metals and most of the commodity market, I imagine, to price in all of that money that we're going to throw at the price situation when it all goes wrong in a few months' time. Right, so that's how we're going to go higher. 1 2 1 2 1 2 1 2. Same as what we're seeing in platinum. 1 2 1 2 1 2. Gold, it could be 1 2 3 4 5 1 2, or it could be 1 2 1 2 1 2. In other words, on the very long time frame, if we look at gold, long term count. Where is it? Is that the one? Yes. So on the super long term count for gold, we've got 1833 back here. First one was Grand Super Cycles wave into 1980. Then you've got 20-year correction. 7,153 days. Okay, and then we go 1 2. This could be cycle within super cycle, fuck knows, or it could be super cycle. 1 2 super cycle, 1 2 cycle, and then we've got our 3 4 that we've done. 1 2 3 4 5 coming up here. 1 2. That's the primary count. The alternate idea is that this is another 1 2. And we've got 1 2 1 2 1 2. The theme is very clear. Okay, look at gold going back 200 plus years and tell me what it's doing. Right, is it going higher or is it going lower? It's going higher, right? With some fucking huge corrections in between in between moves. Right. So now let's come in and have a look at the Elliott wave count as we understand it currently. And this is where things could get tricky. Okay, here we are on the shorter time frame with the simple idea of 3 4 1 2. Looking for an extended fifth. Very common in commodities. We could have the 5 done, that's possible. That would be awfully odd in the commodity sector to see a wave 5 that's a fraction of the length of the wave 3 and barely clear, and doesn't even clear it. Sorry, it does clear it, yes, it clears, it does clear it. On the CFDs here, on the intraday, it cleared that high. So if you're counting that as 1 2 1 2, you're just flat out wrong, because that was a new high. Okay, so we could have a triple top finishing up here. That's possible. Alright, that's possible. And then this was the 5, and now we're coming down. We could have A, B, and now we're coming down. Right, and it was a triple top. I'm not going to say there isn't a bearish count. There is. I'm just saying 1 2 1 2 is definitely not it. Okay, literally can't be according to the price data on this chart. Now, if you get price data from somewhere else that accommodates that count, then you're choosing it because you want it to accommodate your count. Alright? In my book, it's got to be universal, and this is definitely not the case here. So, fair enough. Right, so we've gone up in 5. This is one wave counting the move up for the low. We're getting an extremely deep 2. 3 4, which comes to target. In fact, I think it's really quite an impressive wave 3. 2 6 1 8. 3 4, and then 1 2 3 4 5. So the best way we can interpret the current move down is it's either a completed ABC, where we've gone 1 2 3 4 5 triangle, and then C 5 3 5, and this is ABC complete. Boom boom boom. Okay, and then you've gone 1 2, and now we're on our way up. Alternatively, we can also look at this as 5 waves. We can say 1 2 1 2 3 4 5 3 4 5. Okay, totally legit. And then we go A B C, and we're getting a larger 1 2. Righto. Now, if this is 5 down, it could be 1, it could be 2, and then this will be 3, 4, and 5 off the new lows. That's the bearish count. Alright, so exactly what it is, it's been a struggle for me to get it. Alright, so the count off of the low. This is where we're going to change things around here now, okay? Because I don't like that idea. So let's delete that. DZZ alternate down. WXY. Take that off. WX and then Y into here as a larger WXY. This accommodates our count. So what we're going to do is we're going to update this 1, 2, 3, 4, 5. We'll look at another idea in a moment. That might be 2, might be in. I'm not sure. I really am not sure because it's not a clean count. Okay, it really isn't off of the low. But it took us to new highs, so you tell me how it's corrected then. Right, here's an alternative. We get A, B, C ending diagonal in the fifth of the C to complete at these lows here. Take your pick. And then my best explanation, having deleted that 1, 2, 1, 2 idea, was I don't like it because the 1, 2 of a smaller degree is bigger than this 1, 2, would be an extended wave 1. 1, 2, 3, 4, 5, 3, A, B, C, D, E. We do that A, B, no, we can't go extended. So what we'd have to do is move it up to this high. 4 as a triangle, 5. Okay, we get an extended wave 1 within the fifth of the fifth wave at primary degree. So what am I saying? I'm saying that's minor into intermediate. Okay, and I'd have to go 1, 2, 3, 4, and 5. Like I said, it's all part of a big rethink at the moment because that previous count just doesn't work. I mean, it's the same idea of going higher, I just can't get it to work the way I did it. So we got another extended one inside of here. Somewhere in here there's a 3 and a 4. I'm not sure where it is. I don't know. It could be here, like that, and have that little swing. And this is all 3, 1, 2, and then we've got 1, 2, 3, 4 triangle, 3, 4 triangle, 5, 4 back into the prior wave 4, back into prior resistance of a larger degree. So all of that, it's not super pretty, guys, but it's good enough for me. Okay. And that gives us a 1. Now the question also, it doesn't matter how we get up there, right? Excuse me. Sorry to keep coughing. I know it must be a bit gross. 1, 2. Alternatively, A. We're now into B, C. We'll put that in orange. We'll change it to minor, put it in orange. Just to put it out of touch. Kick it into touch. Major pivot. You clear that. There's no way that's a continued 1, 2, 1, 2 count impulsively from the high bearishly. So if you go 1, 2, 1, 2 and you're suggesting this prior high was the top, but there's no way we can come back above it, like, because it's just wrong if that's the case. So that's just a major pivot there. Okay, so they're the counts. They all come into 1 and 2 or A, B and C. So let's just get them in order. That's 1. DZZ alternate is another one. And then we've got that new idea. It's a long-term count. As you can see, I'm still working on tidying things up. Right. which bit do I need to isolate to get rid of this bit. Don't need that, don't need that, don't need that, do need this. So continuing the same count we've had for months and months and months, years now actually. Let's fill it out. 1 2 3 4 1 2 3 4 5 into 5. That's one way of looking at it. 1 2 3 4 5. All of this is sideways correction, and now we're going 1 2 and we're going higher. That 1 2 that excuse me, sorry. That 1 2 is in line with what we're seeing in platinum. 1 2 is in line with what we're seeing in silver. Okay, so I'm going to have to leave it there, guys, as my voice is falling apart. Exactly how you want to get off of this low, it really comes down, beggar's choice, it really is. It really comes down to whether you want to look at this as a flat pattern, A, B, C, with a diagonal ending contracting ending diagonal in the 5th minor wave of the intermediate C, and then we have to go 1 2 3 4 5 extended 1 2 short 3 4 5 5 short than 3 3 short than 1, but 3 is not the shortest overall. 4 does not overlap into price 1 wave 1 price territory. It's a perfectly legal impulse. It doesn't have to be a diagonal in order to get up here. That's one way of looking at it. Alternatively, we go 1 2 3 4 5. Okay, now I'm sure I added in somewhere, bear with me, did I not add in? It doesn't really matter, does it? It's the same 5-wave structure. So 1 2, it's in here somewhere. So a more conventional wave 3 that comes to the 2618. 1 2 2618 for the 3 4 5 waves in the 5th to get the 1 into the 2. Both leave the possibility of being A, B, C complete into a 2. Both leave the possibility of being 1 2 3 4 5 into A, looking for B, looking for C. Alright, and that's where we're going to leave it for the moment. No doubt, if you've been watching this and you're one of the patrons and you want an update on this at some point, just give me a bell. Let me know on the Discord, and I can always mention it and go over it in the live stream if you want me to explain it further. But they're the counts. Still going on the wave 4 complete into the 5th and final wave in gold. It's just starting the larger wave 3 in silver. Alright, and starting the larger wave 3 in platinum. More than a whole wave behind gold. Okay, but higher pricing to come. Alright guys, thank you very much for joining me on this technical analysis of gold and silver and precious metals. I hope you've enjoyed it. If you're new to the channel, you like what you're seeing, please subscribe, smash the like, hit the bell notification icon to remain informed of future video releases as and when they come. And if you're interested in learning Elliott Wave and getting access to all those educational materials, plus weekly live stream, plus the dividend calendar and stock rating system, you can follow the link in the description below to the Patreon and sign up. Alright guys, take care of yourselves. I'll be back with you as soon as I can. All the best. Bye bye.